much. And moving on to the corporate bond markets, if there was a message coming from companies large and small in the first half of this year, it was this: fear. They went out and raised billions of dollars in cash to stash that away just in case the economy did not get better. Markets editor Andy Cinco following this side of the story. Andy.
Betty, you know, there was the fear of a freeze in corporate lending and/or the corporate bond markets that sent companies out in a race for a dash for cash, Betty, because there was very much concern about how quickly the markets had dried up after the collapse of Lehman Brothers last year. And so companies went out and raised as much money as they possibly could, Betty. And Bloomberg data shows that there was a record $301 billion in investment-grade corporate bonds sold in the first half of 2009. 262 companies, Betty, went out and made that dash for cash. That was an 8-year high. So even companies that seemingly did not need cash went out and raised more money. Take Microsoft as a perfect example. It already had $25 billion in the bank when it went out in May and sold $3.8 billion in bonds just to make sure that it had enough money on hand. And lastly, Betty, the dash for cash is probably not over. You know, bond market strategists we talked to say there's still plenty of demand for corporate bonds, so that should still lead companies to continue to sell bonds in order to raise cash. Betty, back on up to you.
All right, Andy, thank you.